Are you doing a bunch of research on home mortgages and wondering what's the difference between interest rate and APR, or when do I lock my rate? Well, great news. I got Christina Boyette from New American Funding here today to answer those questions. Hey guys, Buydown VXP Realty, part of the Johnson Group, here with Christina Boyette.
Hey.
From New American Funding. And today she's going to be answering a bunch of loan questions, talking about the rate locks and APR and all that kind of stuff. And if you get any value from this video, you can do me a favor, do a like, share, and subscribe. Share this video with your friends and family looking to apply for a loan. Christina Boyette can definitely help them out with that. And if they have any questions about these certain things, you already have the answers. But let's get right into the questions.
All right.
All right. So the first question that I got is, what is a rate lock?
That is a really good question.
Okay.
'Cause especially if you're a first-time home buyer, you're not going to know what a rate lock is.
Right.
So what a rate lock is that's when the loan officer tells you, okay, this is the rate. Once you have an address, a contract, we will give you a rate quote, and you have to tell us if you want to lock the rate. And locking means you like that rate and you want to stick with that rate. So if the rates go up during your loan process, you're not affected by it. So your rate won't go up. So that's the good part about it.
Nice. So rate locking stops you from getting an increase in your rate after you already locked it.
Correct.
Fantastic.
And if the rates go down, you can't take advantage of it.
Oh, okay. All right. Well,
I know.
Is there any way you can kind of like mitigate that?
You can. So some lenders have what's called a float down. So you can lock with a float down, and that means you can, take advantage of the lower rate. But it does come with a fee. Some products have a renegotiation that where if it goes down a certain amount, like 0.5%, then you can take advantage of it. But that also comes with a fee.
And the fees vary depending on the program and all that stuff.
Well, and lenders.
Oh, and lenders.
Lenders mainly. Yeah. Okay.
All right. So can you do a rate lock on any loan, like a VA, FHA,
Yes. It's the same for basically any of it. You've got to actually tell us that that's what you want to do, is lock the rate. And we can't lock the rate until you have an address, a contract. Anytime that the lender gives you a quote, and that's what it is a quote. If they say, this rate is going to be 6.5, that's just a quote. It's not until you have an address and you tell us to lock it is when it's locked.
Okay, so we write a contract, or so we go out looking at homes, we go find the one, we start writing a contract. Mm-hmm. Is that the point, or is it after the home has been the offer's been accepted?
Oh, usually it's after we have the contract.
Okay.
Yeah, you have to wait till you have the contract. It's a done deal.
All right, so when you go under contract with the home, we write the offer. After it gets accepted from the seller, if you're the buyer, then I send the document to the lender, and I send the document to the attorney so that everybody knows what's going on and the process gets kicked off. Okay, so after we're accepted.
After we're accepted, we'll give you a choice of whatever rate their choices are, because you can choose a rate that has no points, or you can have 1 point or 2 points. The more points you pay, the lower the rate we can offer.
Oh, so you're talking about rate buy down at that point, right?
Well, it's not. Well, you're paying for it, but it's not the traditional buy down of rate. But it is you're paying for it. You're buying it down.
Okay. All right.
But it's a little different.
It's a little bit different than. Okay, so what's the difference between a rate buy down and what we're discussing?
Well, that is where the seller is paying for you to buy down your rate. Right. Okay. And that is only temporary. So it could be a year or 2 years, whereas the buy down where you're paying the point, that's for the lifetime of the loan.
Okay. And you can negotiate potentially having seller do a temporary buy down, which we discussed on previous videos. I don't want to get into it in this one. How often do rates move?
Oh, rates can change a couple of times a day.
Oh, jeez.
Yeah. So if you're rate shopping, you really want to make sure you ask all the lenders what their rates are the same day. Not different days, because the rate could be different.
Wow. So tomorrow, if it's 6.5, 5 today, it could be 7 tomorrow. Is that what you're saying?
Well, that's a big jump.
Right. I'm just trying to give an example, I guess.
Yeah, but I mean, they're always kind of moving, but they could be the same by the time we quote you the rate. It could be the same. It could be the same rate as yesterday, or it could be very different, or it could be just more points, more fees to get that same rate.
Okay. So the fees float too.
Yeah.
Okay. All right. So there's a lot to. This is why talking to a lender that you trust really makes a difference, because they can, as you can tell you, all these rates move and all the fees move. So get with the right lender. They can make sure you're taken care of. When we're under contract, we don't have to lock immediately, right?
No, you don't immediately. Well, you have the option to lock immediately, or you can wait a week or two. It's your choice.
Oh, wow. Okay. A week or two. Okay. Yeah, that's good. All right. So another question we had about interest rates kind of thing is, what is the difference between an interest rate and the APR that you see on these loan sheets?
Yeah, that's another good question. You're coming up with some good questions.
Yeah, I mean, that's the questions they ask. So
the rate, the APR is considered with the rate and all the fees associated with the loan. So the APR is a very good tool for the buyer during the time that you're buying only. So you can compare it from one lender to another to see who is actually charging more money. You could have the exact same rate, but one of them could be charging you hefty for that rate. So the other rate, when you're saying let's lock the rate, that is for your payment. So that's important for the life of the loan, because that's what your rate's going to be if you don't have an ARM or adjustable rate or something like that. So that's the main difference.
So what you're saying is, what I think you're saying is that, okay, we can have 6.5 with you and 6.5 with another lender, right? Mm-hmm. But the APRs could be drastically different depending upon what the fees they charge.
So some lenders have an origination fee. That's a flat fee for just having their loan,
right? Or
that rate could have more points from one lender to another.
Okay. So the APR is just telling you what the rates are. So you're saying, if I was looking to shop, I look at the APR, and that's how I know, okay, if USAA's at, like, say for instance, our interest rate's at 7, but our APR is at 8.5 with USAA, and it's at 8 for you guys, that's how I know the fees are higher with USAA versus
Correct.
You. There you go.
It's a good snapshot for you.
Like a eureka moment right there. And I guess that's probably the same for cars too. So if you ever go doing car shopping, then there you go. All right. So, okay. Now, when they're going through they're shopping for loans, they're looking at the APR differences and the interest rate differences. Do you also provide them with like an estimated worksheet of what they would be paying a month with like interest and all that stuff?
Yes, that's very important. So I will show different worksheets for different loan programs because they all have different rates. Mm. And I usually start out with what the client says, what they're comfortable paying, what they want their mortgage to be.
A month.
Okay,
right. Gotcha.
So I start there and give them a few worksheets. And then if that's not what the purchase price is not going to be sufficient enough, maybe they want a bigger home, then we start doing worksheets at a higher amount, and we keep going higher until they feel comfortable. And the worksheets really help them see, what is it going to look like? What does this home look like if I want my payment to be $1,500?
Like I always tell my buyers, when you talk to the lender, tell them what you want to pay a month. You got to be forthright, okay? You got to let them know what your plans are. I always say just tell them the whole story. Like, let them know everything, because the only way they can help you is if they know everything that's going on. So it's very important when you talk to your lender, hey, I want to pay $1,700 a month or $2,000 a month because of this situation, that situation, whatever. And then maybe some situations that the lender could probably help you with, maybe, you never know. So be very forthright with your lender so that they can help you the best way they can. Okay, so monthly estimates. And you guys include the insurance and taxes and all that stuff. What about HOA fees?
We don't collect HOA fees.
Okay.
That's separate. Now, we do add that in the debt to income for the approval of the loan.
Okay.
But the mortgage payment's not going to have the HOA.
So the mortgage payments include your taxes and your insurance, but not the HOA. HOA is separate. Okay, you have to pay that on your own. Okay.
Now, if it's in a flood zone, we will add flood. But if it's not in a flood zone, we will not add the flood to your payment.
All right, so we're going through this process, I send my, we go under contract, you have the number, we lock the rate. How long does it take for the loan process to be complete?
Well, the loan process actually is really quick. I mean, we can get someone approved in 24 hours after we have their documents.
Right. So what kind of documents is that?
Typically, it's W-2s, last 2 years W-2s, 30 days of pay stubs, last 2 bank statements, copy of driver's license.
Okay.
That's the basics.
All right. Cool. All right. And you said it takes really quick. So a lot of times we say 30 days to close a loan. That also includes your appraisal, right? Which is dependent sometimes on the seller, whether they can get out of the house sometimes so the appraiser can go through. So there could be some scheduling conflicts, but the approval process is really only as quick as it could possibly be.
Yeah, I mean, that is beautiful. So you'll know up front, if there's going to be any issues.
All right. Well, fantastic. Well, thank you so much for coming. I really appreciate it. And if you guys have any questions for me or Christina, I'm going to keep that stuff down below so you can check. I have her phone number. But if someone were to call you now, can you give your phone number, please?
Yes, 912-433-3960.
And my number is 912-657-3544. Give me a call anytime if you have any questions. And thank you guys for watching. I really appreciate it.